What's up, folks? Hope you're all having a great Monday or Tuesday, depending on where you are in the world. It's been a heck of a 2 weeks for Bitcoin. Obviously, things really bottomed out around January 22nd through 24th. And over the past two plus weeks, things have turned around in a hurry. The prices were down to about 33.5K just a few days prior to the FOMC meeting, which involved the Fed kind of looking at quantitative easing processes and how to handle the growing inflation here in the US. And obviously, the US markets have been very much correlative with the price of Bitcoin as of late. And I'll illustrate that with you guys on this call. Before we get into that, I wanted to quickly show you how the utility is looking with Bitcoin up about 22%, sitting at around 44K now over the past 2 weeks. The question is there room to spare? Can things really surge up to 45K or even 50K again and rebound rather quickly? Would the crowd expect this? Is the crowd actually using Bitcoin and circulating it at a healthy rate? Well, to answer that final question, the answer is absolutely yes. We're seeing for a fifth straight month a justifiable semi-bullish indicator indicating that circulation, the amount of Bitcoin moving on a daily basis at the current market cap level, is justifying that prices can continue to rise. What we want to avoid is this red section, which was indicating we were not getting nearly enough circulation to justify the prices being up here. This is, of course, when we had that first all-time high. We were eventually able to, through all this volatility, get a semi-bullish indicator again, which propelled Bitcoin up to all-time high levels. And then, of course, things plummeted, but circulation stayed relatively up, if not dropping just a tiny bit. And I'll illustrate that here. This is the last 6 months of Bitcoin circulation. I'll actually back it out to the last year. And we see on this 7-day, I'll actually turn this 7-day indicator into a 30-day moving average instead to get a little more smoothness here. And you can clearly see, the big drop in circulation started in June as the price was already dropping off a cliff. And even when prices rose, look at how circulation stayed low. It did not immediately rise back up the way price did. So price ended up plummeting once again. But this time, as it was plummeting and really bottomed out in mid-September, look at how circulation was starting to rise, and that allowed the all-time high to occur. And plenty of other bullish indicators were, of course, happening simultaneously with this. But you can see that circulation was rising all the way up until mid-December, even after the big drops were starting to occur, and this was correlating with some S&P drops and all sorts of things going on. Then circulation dropped off. Now it's rising back up again. But we still have been nowhere near where we were when things were really looking rough over the summer. So that's a good thing, and it's why, looking at this NVT model, we're seeing still a pretty good sign here, especially with prices dropping. That means that even when circulation has a mild drop like this, like it did in January, it wasn't that big of a deal on the model because the model is calculating how the amount of circulation is comparing to current prices and market cap levels. Price and market cap are generally pretty much in harmony most of the time. So even with the drop, prices were dropping just as much proportionally, allowing us to get the semi-bullish indicator there. I promised you the correlation chart on Santiment's comparison between the S&P and Bitcoin, and I'll also include gold here. I'll show you how I do it. So we have Bitcoin's price here by default, just by going to our charts page. And then I'm going to go, not there, excuse me. I'm going to go, no, I'm sorry, I had it right. SPX, click on that, click on price, double click the chart, and now S&P is on. And then I'm going to do it one more time, GOLD, gold, price, double click. And now I'll even make gold for those who feel that that's appropriate. I like to make the chart as easy as possible to understand. I'm going to click shared axis here to show you just how skewed things are if they were all on the same axis. Obviously, these are very different prices that each of the three sectors fluctuate around. So it's best to keep that off, which will show you that overall, let's go last 3 months. Overall, the S&P and Bitcoin have fluctuated pretty closely. Let me see what it looks like over the past year. Yeah, so the correlation really started right around November. Then Bitcoin dropped much more than the S&P did, and now they're kind of jumping up in tandem. So it's easiest to see when we really zoom in here. So check out how tight the S&P's high and the S&P's low has correlated with Bitcoin's almost high, except for right now where it surged past that over the past month, and low. But you can see very clearly the pink line here representing the S&P, green line representing Bitcoin, very, very much in unison right now. And generally, that's not the best thing to see. We want to see Bitcoin either going up while S&P is going down, or vice versa, or at least not connected the way they have been. And check out how things look after this gap over the weekend. Of course, the S&P does not have trading over the weekend, and Bitcoin does. Look at the absolute monstrous surge that Bitcoin went on just over the past 3 days. I'm going to hold down Shift and drag this to indicate just in the past 3 days, it's up 17%. And then since the bottom that occurred on the 24th, it's up 31%. I think I said 21%, and I meant 31%. So that's a huge, huge climb for Bitcoin in just the past a little over 2 weeks or so. So this is actually a good sign. The fact that the S&P didn't really have anything of a special Monday, it was mostly break even, while Bitcoin was able to continue climbing during the open trading hours that the US markets were on. That's a good sign and could indicate that the correlation between the two is finally starting to ease up. So now I'm going to go back to the main charts that we usually use to find leading indications for Bitcoin. We checked out circulation, saw that it hasn't really moved much. If I add a 30-day indicator to our daily active address chart instead, we can see that it's done a very, very slight drop, but really hasn't changed much. And just like in circulation, the amount of address activity is easing up a little, but it's not near how low and dismal it was looking in the summer. So probably a little more of a neutral indicator because it's still way below the amount of active addresses that were occurring during the first half of 2021. And that would be a nice welcome sight if we started to see active addresses like this consistently with 1 to 1.1 million at minimum on most days in terms of address activity, excluding weekends where you'll see these big drops, of course. So that would be a great sign. Utility overall is looking fine, but not overwhelmingly bullish. We'll just leave it at that. Social volume wise, we've also noticed a slight uptick in the amount of discussions related to Bitcoin. It isn't looking amazing by any means, but generally we want to see the social dominance start to look like this. This was happening in the early part of the big plummet, well, after the really big plummet in mid-May. Then it went down a little bit further, a lot of polarization, a lot of people discussing whether Bitcoin can recover. It eventually did in a big way. So we want to see high social dominance overall instead of barely being discussed like here, where in like late November, prices were really, really dropping down in a hurry, implying that there was a little too much interest going into altcoins and what those more volatile assets were doing compared to what Bitcoin was doing. But finally, we're at least seeing, a rise from the very bottom of the past year. And in the latest day, it's still above that, around 14% of discussions at peak, right when things were bottoming out. It actually got up to 16.5, almost 17% of discussions. So things change a lot. And when you see a big upswing in social dominance, I know that blue makes it kind of clash, but if you see a big upswing like this in social dominance, that's a good sign that there's starting to be some increased recognition and Bitcoin is getting noticed again, as it should be always be noticed, considering how much of a peg it has on all of crypto markets fluctuations. Moving down, I'll skip funding rate because I'm going to show it on another chart here. MVRV looks quite interesting. You can see that it bottomed out, obviously, right at that bottom, where average traders were only, 30-day average traders, I should say, were only about negative 19% on their average returns. This was the second lowest point in the last year outside of mid-May, when they actually got down to about negative 26, 27% in returns. That's a humongous plummet that we rarely see. Generally, if we see MVRV below there or above here, I'm just marking the plus 15% and minus 15% marks. These are the extreme points where you're going to see a big buy opportunity if it's under, and a big concerning alarm bell if it's above. You can see that when it got above, local tops tend to be formed soon after. You can see one here, you can see one here, you can see a big one here. And then when it's below, you can see the big bounces that occurred sort of here, but definitely very much here. It's more reliable when it's up high, admittedly. That's why those correlations look so good. But overall, you are de-risking by a ton if you are buying while the 30-day MVRV is below 15%. And there are several other examples over the years I can show on another discussion. But for this one, I'll keep it brief. MVRV has soared over the past couple weeks and is now actually close to a bit of a danger zone yet. It's not there yet, but considering just how fast it's climbed, it would not be the worst thing in the world to consider taking profit, not investment advice whatsoever. It's your choice what to do. But historically speaking, this is a slightly riskier time to buy in now after Bitcoin's price has already began to surge the way it has. All right, mean dollar invested age, not much going on. As this line continues to rise, that's an indication that dormant investments are staying put. We'd rather not see that. We want to see the mean dollar invested age line drop like so, indicating that coins that had been sitting in an address for a long period of time are finally moving and circulating to other areas, indicating healthy utility for the network. Right now, not really happening, so this would be a bearish signal. Weighted sentiment, interesting here. The negativity really got to its peak in early January, and prices continued to plummet. And interestingly, people started to get a little more positive. They were around neutral here, and then prices began to soar. Then we had this euphoric spike happen 3 days ago. This was the most euphoric the crowd had been since very early December. So about a 2-month high in positivity, and it's still staying high. So this is a concern as well. You don't want the crowd to start getting super hyped and euphoric that prices are going to rebound to 50K and beyond. We'd rather them not believe the hype here and stay more negative. But more on that to come. Really briefly on whale activity, we're seeing that there is an uptick in the amount held by the highest tier of Bitcoin traders. They hold between 100 to 10,000 Bitcoin typically. Yes, there are the occasional addresses that actively trade when they're holding above 10,000, but we have found that this specific tier tends to be the best, most prevalent trading tier of whales, and we like to look at it to give us a glimpse at what those top key stakeholders are doing. You can see they were holding about 49.5% back in late October. Now they're sitting at about 48.5%. So they've actually dropped about 1% of all of Bitcoin's supply over the past 3.5 months or so. A bit of a concern. We do see that here, just in February, I'm going to change this to absolute values so we can see just how many Bitcoin they have actually accumulated. They were holding 9.14 million Bitcoin on the 1st, Now they are back up to 9.17. So they've added a modest 30,000 Bitcoin in the past week here as February has progressed. So a good sign short term, but long term, just understand that they're still holding way less than they were when they peaked here in late October, right before that all-time high occurred. So keep that in mind because they do tend to foreshadow prices. We'll leave, let's see, exchange flow balance not really doing much. Outflows, the biggest spikes lately have been outflows, which is a good thing. We're continuing to see, and this is related to this chart, we're continuing to see Bitcoin moving off of exchanges by a wide margin, and that is generally a good thing. They were holding a peak of, it looks like about 14.3% close to a year ago. Bitcoin's network, that is. 14.3% was on exchanges. Now it's down to 11.5%. So yeah, give or take 11.5%. So in 11-ish months or so, the amount of supply that is on exchanges, 3% less are, a little less than 3% less, are off of exchanges compared to where they were. And that is a very good sign and a good indication that if there is still a lot of major sell-off risk, it's going to be more limited now than it was a year ago. All right, and as promised, I've got a few other special metrics I can show. This is the average MVRV chart, which indicates what all of the different time frames look like together, not just the 30-day MVRV, but it's combining 1, 7, 30, 90, 180, and 365 days all together to show how close we are to big danger zones and big opportunity zones. You can see these called the tops and bottoms a little more precisely. Generally, when it goes negative, that's when you see the bottoms. The more negative it gets, the more confident that a bottom is occurring. That's exactly what happened on the 22nd. There was one more leg down the next day, next 1 to 2 days, I should say, and then blast off, right? And the pink line here jumped back to where it is now, which is neutral. The other chart here is the 30-day divided by 90-day. One of our community members found this indication a couple months ago, and I've always liked it a lot because it's kind of a nice separation between short midterm traders and longer term midterm traders and how they are performing almost against one another. When things go really negative, there's usually some gradual upswing, and when it's really positive, there's a bit of a downswing. You saw this one was kind of a twofold bump up before it dropped down here, and then it really bottomed out. I think this was the biggest downswing in the last year. Let's try that one more time. No, I take it back. So June through July was actually even lower. But long story short, when you see the major negative marks on the 30 divided by 90, good time to buy. Major positive, good time to take some profit. Active addresses versus price is also interesting. We can see some major spikes that occurred right around the bottom. That's because address activity was staying high despite the price falling. This was a good bottom indicator because it was the highest spike we had seen since late July. And then there was a second one here. Now that the price has caught up to address activity a bit, we're actually showing a bit negative once again. So something to be cautious of when there's this much of a price uptick while active addresses are mostly staying flat. This is pretty much the same as weighted sentiment. It's showing slight positivity, but nothing exceptionally euphoric right now. And then last but not least, average funding rate. I really like this one because it's combining the Bitfinex, Binance, DYDX, and FTX funding rates to give us an idea of how much people are putting their money where their mouth is on all of the social posts that they're either positive or negative about Bitcoin on. When we see major positivity, that's when these tops tend to occur, just like MVRV. And right now, we're seeing another bump down of negativity where people aren't quite believing that this rise can last. And that's a good thing. People are shorting right now. The shorts are outpacing the longs, indicating they don't expect that this rise can last and there's going to be some inevitable leg down. Historically, we can see a long stretch like this of shorts where prices can continue to fluctuate and even go down a little further, but it's generally a matter of time before a lot of these shorts get liquidated or they just give up on the shorts themselves. But either way, better time than average right now if you're longing, considering the amount of potential liquidations that can occur and then cause a lovely little rocket emoji. I love when I get to use these emojis twice in one call. Anyways, guys, that's a quick update on some of our best leading indicators for Bitcoin right now. If you don't have Sanbase Pro, really good time to jump in with so much polarization happening and big changes occurring every day pretty much. We've been on a great 31% surge over the past few days, but that can change in a heartbeat. And when it does change, you can use these kind of metrics to see whether this is the big sign of a correction or if it's just a little bump in the road. So let us know if we can help. Email support@santiment.net if you want more info, and they can help you out. Drop by our Discord as well, whether you're a pro member or not. Our Discord is in our Twitter bio. I'll also drop it in the description of this video, and we're more than happy to talk to you and welcome you in. We've got a really awesome community, so I hope you can join it. Talk to y'all soon. Thanks for watching.